class, a very good morning to everyone. Assalamu alaikum. This is Iqbal, Bhabha. Welcome again to this session. We are going to start with full energy and enthusiasm the very first topic and IAS of F7, and that is IAS 16, and the title of this is Property, Plant and Equipment. As I have told you earlier in my introductory session that most of the tutor, including me, starts the F7 practical paper, and the first IAS we choose is IAS 16 because it is easier for the students to understand and retain the concepts of IAS 16. And this IAS actually is taking the knowledge from the previous academic paper of financial accounting, and that is the F3 paper of ACCA, and that is why the students feel it easy for the tutors to start the F7 paper with this IAS, because you are taking the brought forward knowledge from the F3 paper. Sir, I would want all of you to put away your all distractions, and by distractions I mean I'm talking to you, yes, Mr. Snapchat, WhatsApp, Facebook, Instagram. Please keep those distractions away, and I promise you that you will miss me during the exam, because I want all of you to pay attention to this IAS. I want all of you to pay attentive throughout the session. I want all of you to pay a focus and a crystal clear attention to this IAS, as this IAS deserves. Because if you will miss any single point and the nitty-gritty or the basic points of this particular IAS, believe me, at the end of this IAS you will treat asset as liability or the liability as an asset, and I don't want this. So please pay attention, put away all your distractions, all your notifications, and have a crystal clear focus I need from all of you. One more thing, I need this session to be interactive. I've told you earlier in my session that I want this session to be a dialogue and not a monologue. So you need to note down every possible point which you develop during the course of this study in your register and ask me via WhatsApp or via community chat. Sir, we are going to start this IAS property plan and equipment, and in this IAS I will not only discuss the learning outcome, but we will try to take knowledge from the financial accounting paper. I will assume that many of the students have a little bit understanding or the memory related to the IAS 16, so we will assume that IAS 16 property plan and equipment knowledge is completely zero in the students' mind, and we will try our level best to start this topic from the scratch. And I will try to give a practice question and to attempt the practice question after a very small, even a theoretical question. So let's start this IAS with full enthusiasm and energy. And this IAS, the title of this IAS is Property, Plant and Equipment. So we are going to have some conversation with IAS during this course, and the IAS starts responding even to this particular question. So why did the building feel insecure? Always remember, because it knew that it was going to depreciate over time under IAS 16. On a lighter note, on a very serious note, we start the learning outcome of the IAS 16. First of all, we will discuss the property plan equipment definition, a very thorough definition of the property plan and equipment. Then we will discuss the recognition criteria, and then we will discuss the depreciation methods and the policies, and then the revaluation and disposal. We will try to touch every possible topic in detail, in depth, so that you could develop an understanding about how this IAS would be examined in your F7 paper. So first, navigating to the next slide, the PPE, IAS 16 defines the property, plan and equipment as tangible item. Please note this. Please underline this, a tangible item, because if it would be an intangible item, so the IAS would be changed. So IAS 16 deals only with the tangible item, and I have bold every possible word which is necessary and mandatory for you to understand and to note down. So IAS 16 deals with the tangible items and not an intangible items. The intangible items IAS is IAS 38, if I am remember and if I am not wrong. So IAS 16 defines a property, plant and equipment as tangible item that is held for use in the production, number 1, or the supply of goods, number 2, or the services, number 3, for rental to others, number 4, or for the administrative purposes, number 5. This is the one criteria in which 5 points needs to be noted down and needs to be remembered. Number one criteria, and number second criteria is that those tangible items that are expected to be used during more than one period. During more than one period, it means that if the tangible items is acquired for the purpose of consuming within a year, it is outside the scope of IAS 16, and we will not treat those particular particular asset under IAS 16. So we will treat those assets that meets the strict criteria of IAS 16, and that is the two main conditions. Number one is held for use in the production, number one, or the supply of goods or services, or for rental to others, or for administrative purpose. And number two main criteria is that that particular asset is expected to be used for more than one period. So remember, now we are going to discuss what is meant by the held for use in the production or the supply of goods or services. So I am giving you an example. You need to understand very clearly, very carefully, and very attentively to my example, so that you could develop an understanding what is meant by held for use in the production. For example, a textile company purchases a weaving machine to produce fabric. Attentive, pay attention. I need all those distractions, please put away. Pay attention to my line. A textile company purchases a weaving machine to produce a fabric. All right. Now, for textile company, that particular weaving machine falls under the category of IAS 16 because that plant is acquired for the production of goods. For the textile company, the goods is fabric. For the textile company, the plant is weaving machine. So the weaving machine is treated as the property, plant and equipment IAS, and that particular weaving machine is a plant, and the fabric production is the production of goods. So remember, any company acquires any machinery or imports any machinery for the production of goods. So that particular asset falls under the category of IAS 16 if it is expected to be used for more than one period. And we assume that in an accounting, a machinery acquires is assumed to give you the economic benefit over the period of a year because it is being used in the regular part of a business. So remember, the one example is that the textile company, again, a textile company purchase a weaving machine to produce a fabric, so that particular weaving machine is the plant or is the property, plant and equipment, or is an asset for that particular company. Now remember, if that particular textile company purchase a vehicle to deliver that produced fabric to its industrial customer or to its retail customer, so that particular vehicle also be treated under the IAS 16. Why it is? Because that textile company, for that textile company, the vehicle is also being used to supply of goods. So the IAS 16 is very clear on that. For the weaving machine is also is an asset because it is being treated in the production of goods. And for the textile company, the vehicle, the logistic is, or the transportation is also treated under the asset because it is being used in the supply of goods to the industrial customer. So this is the two example. The IAS 16 makes it very clear for the students to understand. Now, what about the services? Now take an example of this environment in which I am delivering the lecture. I am in a particular building in TSA's Ecademy. I'm in particular building. I am doing what? I am using this whole studio to deliver the financial reporting F7 international stream paper of ACCA to my students via this recorded or via this equipment to you. Now, what this building in which I am in and I am delivering my lecture to you, what this building has been acquired for what purpose? Just to give the services to the international students like you. So this building has not been acquired for the production of goods. This building has been acquired for the production of services, for the production of a mainstream service in the form of teacher to the students. So any building any building that has been acquired only for the production or only for the provision of the services to the students in the form of teacher, that particular building for that particular institution will also fall under the category of IAS 16. So we have seen three examples: the production of goods, the supply of goods, or the production or the supply of services. Even though the equipment that is being used in delivering my lecture services to you, for example, a camera, for example, this lightning, for example, the sounds bar, for example, the mic, for example, the laptop, for example, this particular mouse, for example, the studio recording equipment, every particular furniture, every particular equipment would also fall under the category of IAS 16, because it is also being used in the production of services. It is a support furniture, it is a support equipment, it is a support asset that is combinedly being used in the provision of services. So remember, the production of goods, any machine that is acquired or imported for the production of goods would fall under the category of IAS 16. Any vehicle or any logistic company that has been acquired for the production, for the supply of goods, that would fall also under the category of IAS 16. And any building or equipment that has been acquired for the production or for the supply or the provision of services would also fall under the category of IAS 16. The next part is for the rental to others. Now, what is meant by for the rental to others? Now, that is very much important part, because this part is often confused with IAS 40. With IAS 40, the investment property. So I would make it clear here. So what is meant by it? I just want you to pay attention. Please pay a crystal clear focus attention to me. I just don't want distracted students. For rental to others. So what is meant by rental to others? Rental to others means that, for example, if a company owns a vehicle, if a company owns a vehicle or owns a building or own any equipment in the part of its regular business, and for that particular time of the day, that particular vehicle or the equipment or the building is rented out to others to earn the rental income. For that particular vehicle, for that particular machine, for that particular plant is rented out others to earn rental income, that would also fall under the category of IAS 16. Your primary purpose is not to earn the rental income, and that is much more important point here. Your primary purpose is in the production of goods or services, but you, for example, don't want your assets to keep idle, and you want your assets to be rented out to the students to earn the extra rental income occasionally. So that would also fall under the category of IAS 16. And the last part is any building, any office has been acquired for the purpose of administrative services. Now I take the example of educational setup. For example, in my academy, the CEO decides to allocate a particular office or a building only for the administrative purposes. So what is mean by administrative purpose? For example, receiving a complaints from the students, or for example, having a quality control issues department in using that particular office, or for example, daily operations of fee and daily operations of handling emails and handling queries and handling quality control or handling notes. That particular area has been defined, has been designated only to provide the administrative services. So that particular office or building would also fall under the category of administrative services, also fall under the category of IAS 16, and we will treat those particular assets under the criteria and the conditions and the rules and the policies of IAS 16. So remember, any asset must be a tangible asset. Sir, tangible asset, what is meant by tangible asset? Having a physical form. I can touch that physical asset. I can see that physical asset, which is different from the intangible asset, which is not touchable, which don't have any physical appearance. So remember, tangible asset means any asset that holds the physical appearance. And that particular asset held for use, not held for resale, not held for realizing a short-term benefit, not held for the purpose of acquiring a short-term gain, held for use in the production of goods, in the production of services, in the supply of goods, in the supply of services, or for rental to others, or for administrative purpose, and has been acquired for more than one accounting period, would fall under the category of IAS 16. These two conditions and the criteria must be kept in mind. Even if you are in sleep mode, even if you are in sleep mode. So these criteria must be kept in your mind so that you could have the awareness how to make the particular IAS or particular asset distinct from the other assets. Moving forward. Now that's the important part, the confusion and the clarity. The confusion and clarity. Sir, what is the difference in IAS 16 and IAS 2? You must have studied IAS 2, the inventory part, in your FA1, in your FA2, in your F3. And this IAS 2 is like a peanut for you. And you must recall this IAS when I will be talking with the mixture of IAS 16 and IAS 2. Remember, if I acquire any building, now remember, if I acquire any building for the purpose of resale, if I acquire any building for the purpose of resale, remember my words, keep my words, pay attention. If I acquire any building for the purpose of resale, that particular building would become my inventory and would fall under the category of IAS 2. But if I acquire any building for the purpose of use for my production of goods or services or for rental to others or for administrative purpose, that particular property would not fall under the IAS 2 but would fall under the IAS 16. So see, your intent and your purpose and the nature of asset is very much important to determine which IAS is applicable, which IAS is practical. So always remember, the examiner can make you confused by giving you the nature of business and can ask you the advice on the appropriateness of the IAS, keeping in mind the nature of business. So you always remember, if I am acquiring for the purpose of resale, if I'm acquiring for the purpose of acquiring a capital gain, or for example, if my main purpose is to buy and sell the asset, the property asset, so that particular IAS would be my inventory. And if my purpose would be use that particular building for the production of goods or services, that particular applicable IAS would be IAS 16. Now recall the example that I've given you earlier. A textile company purchased a weaving machine to produce a fabric. So for textile company, a weaving machine is a non-current asset and the property, plant and equipment, and the textile company would treat that particular weaving machine under IAS 16. But that produced fabric would be the inventory of that particular textile company, because the fabric is not being held for the consumption. The fabric is being produced for sale. So remember the difference of purpose, and you need to be very clear between choosing of IAS 16 and IAS 2. Now, the difference in IAS 16 and IAS 40. So remember, if the property has been acquired, if the primary purpose of acquisition of the property is to earn the rental income or is to have the capital appreciation, or both, is to earn the rental income, or your intent is to sell the property and to take the capital appreciation, or both, so that particular property would be treated under IAS 40. Again, it has become distinct, and it is very much clear, it should be very much clear to you that how the IAS 16 is differently applied in different kind of an asset. My purpose is not to acquire the asset for the production of goods or services. My purpose is to acquire the asset to earn the rental income or to have the capital appreciation, or both. So that particular IAS is IAS 40. So remember the differences in IAS is keeping in mind the nature of business. Now, sometimes the owner does what? I acquire a building and I do my production as my regular part of the business, for example, from 9 to 2. And after 2, I rent out my property to others to earn the rental income, because my property is idle after 2 p.m. So what do I need to do? Now the property is being used for two purposes. From 9 a.m. to 2 p.m. the property has been devoted to the production of goods, and after 2 p.m. the property is being used to earn the rental income. So what is the main? Is this the IAS 40 or is this IAS 16 would be applicable to this particular property? Now the IAS is very clear, a general rule. What is the major part? What is the major part of that particular rental of a major part is the property is being devoted to. If the major part of the property, if the major time of the property, if the major revenue of that particular property is being derived from the production of goods, so the IAS 16 would be applicable. If the major part of that particular property or the revenue of that particular property is derived from the IAS 40, so the IAS 40 would be applicable. If both the purpose is allocated exactly 50-50, so both the IASs would be applicable, and the ratio of that particular rental income or that particular provision should be applied proportionately. So remember the confusions and the clarity. I will later on discuss the more types of IAS, more types of IASs and more types of different assets. For example, agricultural assets would fall under the category of IAS 41. So the nature of assets change, the IAS change. IAS 23 would work under the qualifying asset, those assets in which you take the loan from the bank. So IAS 23 deals with a different kind of asset. IFRS 16 deals with the leased asset. So the nature of assets change, the IFRS changes. So you need to understand first the definition and the nature of that particular IAS, and the relevant IAS would be applicable. I hope that you all are with me, you all are attentive, you will be enjoying the show, you will be enjoying this kind of a dance party that we are doing. You are attentive and you are keeping your all distractions, be it Insta, be it Facebook, away from you. You will miss me during the exams. So sir, we are going to discuss now the recognition criteria. Now the recognition criteria, what is meant by the recognition criteria? First of all, you need to understand that there is an initial recognition or the initial measurement. Both terms are interchangeably used and both terms meanings are same. Initial recognition or measurement, what is mean by it? There are two criteria, only two criteria. In this F7 paper, the examiner is less likely to ask this kind of a initial recognition from you during the exam. But for the purpose of clarity and for the purpose of covering the whole syllabus, I am providing you this slide and I am teaching you this. But I think it is rare that the examiner will be asking you to this kind of question during the exam. So first initial criteria is that it is probable that the future economic benefit associated with flow to the entity. You need to make sure just that whatever the asset has been acquired the economic benefit must be derived from that particular asset and must flow to the entity. And the economic benefit, what would be the economic benefit? It is not necessarily that that particular asset would generate the revenue, but it is also possible that that particular asset has been acquired to reduce the cost. For example, a company installed a solar system in its roof. So what does the solar system do? It produces a revenue? No, it reduces the cost of electricity bill. So IAS 16 is telling you that solar systems also fall under the category of IAS 16. Number one, because it is being used for the administrative services. Number two, it is flowing economic benefit to the entity because it is there to reduce the cost. So not necessarily that every asset you have acquired is to generate the revenue. If the asset has been acquired to reduce the cost, so that would also meet the criteria of initial recognition. And number two criteria, now that's most important, that can be examined. The cost of the asset can be measured reliably. We will later discuss this topic, the what components of cost should be there in order to qualify, in order to combine a total cost of an asset. So two criteria of the initial recognition. Number one, future economic benefit must flow in the form of increase of the revenue or in the form of cost saving. And number two, the cost of the asset should be measured or can be measured reliably. Number two criteria is secondary or the subsequent recognition or measurement. I'm repeating, subsequent recognition or measurement, which is different. Hey, please pay attention, clear focus. Subsequent recognition and measurement is different from subsequent expenditure. Sir, what is mean by it? Yes, now pay attention. Subsequent measurement and recognition is different from subsequent expenditure. I will later on will be discussing what the subsequent expenditure is. But right now we are discussing subsequent measurement. So you need to understand the two types of measurement, initial measurement and or initial recognition or subsequent recognition or subsequent measurement. After initial recognition, when you initially record the cost of an asset after combining all the components of cost, then the entity has a choice. The entity has the choice between the two models. Number one is cost model and number two is revaluation model, and that is examinable in F7. to the greater extent that you even can't imagine. That is examinable under the preparation of the single financial statement, that can be examined under the separate question, and that can be examined along with the other IASs. So after the initial recognition, students, after the initial recognition, the subsequent recognition takes place, and the subsequent recognition opens up or exposes the two choice to the company. Number one is cost model, number two is revaluation model. The cost model means keeping the cost as it is in the register as you have originally recorded. The formula would be the cost minus accumulated depreciation, it's equal to carrying value. The cost minus accumulated depreciation is equal to carrying value. Don't worry about the practical aspects of it, I tell you. Don't worry, I will be dealing every practical questions, and in detail we will be discussing what is meant by it. So the cost model formula would be cost minus accumulated depreciation, it's equal to carrying value. The format of the cost model is, it also means that the company chooses to record the model as it is, as if it was originally recorded. The revaluation model takes a U-turn. The revaluation model pushes the company to upward your assets. The revaluation model is carried out every 1 year or 3 years according to the policies and the policies of the company. So the revaluation model pushes the company to revalue the asset. The revaluation model is kind of a motivation for the asset that is being revalued, kind of a revalued. The revaluation model pushes up the assets. So the revaluation model, it can be a little bit tricky, but don't worry, I'm here to make it easy for you to understand. So revaluation model formula would be the cost minus accumulated depreciation, it's equal to carrying value. Sir, is this kind of a cost model? No, the carrying value would be compared to the fair value, and the revaluation surplus and the losses would occur. So we will later discuss what the revaluation format would be, what the cost model format would be, what kind of a double entry would be drawn under the revaluation model, what kind of a T account would be drawn under the revaluation model, and what kind of a practical question, a basic practical question, just to for example revise and just to recap the concepts we already discussed in the previous academic paper. Again we will be discussing practical questions again. So remember, initial recognition, 2 criteria, subsequent recognition, 2 choices, not a 2 criteria, 2 choices, cost model and the revaluation model. Now the most important part is the initial recognition. Now we are discussing in detail what the initial recognition is, that I have discussed, that I will later discuss on the cost of the model, the components of the cost. So initial recognition, what should be included? Now we will understand this by taking one of the example, so that you would make it clear, such that what the initial recognition is and what the component of the cost is. So the general rule is, it includes all the costs directly attributable. Now remember this line and repeat this line 5 times in a day. Repeat this line 5 times in a day, because you would forget. I am addressing those students who are continuously on and busy in taking the selfies, or in, for example, watching the notifications of the Snapchat. Don't get distracted, please. This includes all the cost directly attributable, the cost that is directly attributable to bringing the asset to the location and the condition necessary for it to be capable of operating in the manner intended by management, and to bring the assets to its intended use or readiness. So what this kind of a French language is this? Don't worry, I'm here to make it easy, but just pay attention. All the costs directly attributable. Now remember, for example, I have incurred a particular cost just to make this pen workable. If this pen would not be here, I would not incur that cost. For example, if the nib of this pen is not working, I've gone to the market, purchased a nib and installed the nib here. If this pen would not be in my custody, would I go to the market and purchase the pen nib? No. So that is directly attributable. It means that particular cost has been incurred only if this particular asset is there. Without the asset, that particular cost would not be incurred. So that is known as directly attributable. And the another meaning of this directly attributable is that you can allocate that particular specific cost to that particular asset. It is not. It would not raise the questions of the allocation or the reallocation. A directly attributable, a direct specific cost to the direct particular asset. Without the asset, a cost would not incur. And the second meaning of this is, I would take into account every possible cost till my asset becomes capable of till my asset becomes capable or intended by me, till my asset produces that particular goods which is intended by me, which fulfills the purpose of mine. For example, if I purchase a particular machine to produce the pen, so all the cost that would incur in producing the pen that would be desired by me would fall under the category of the initial recognition and would fall under the category of the components of cost.